Welcome back. Now, as the winter months approach, South Africa's agri sector is getting ready to export oranges and mandarins to the US. Last year, the country's citrus exports to America ranked in nearly 2 billion rand, but this year it may be much lower as the citrus export value chain may be squeezed by the 30% reciprocal tariffs imposed by President Trump. According to Absa's AgriBusiness report, the impact of tariffs on local citrus exporters will hinge on the health of the U.S. consumer. Marlene Louw, Senior Economist of Absa AgriBusiness, joins us with more insight. Marlene, thanks so much for your time this afternoon. And let's start there. Let's start by discussing the kind of impact the 30% tariff will have on the citrus industry. I mean, we have industry experts also highlighting margin pressures and the risk to job cuts.
Yeah, 100%. So what a week. I think it's been a week since the Liberation Day tariff announcements. And the crucial story for our citrus industry is really that it has undone a level playing field. So we face a 30% tariff, whereas our competing exporting markets in the Southern Hemisphere like Chile and Peru only face a 10% tariff. And so our concerns there over the long term is really if this season, we see lower volumes being exported to the US as a result of the higher tariff. If that's taken up by some of our competing exporters, how will we regain market share, and what is the impact then on longer term economies, specifically relating to rural jobs like you've alluded to?
So it does kind of create a different kind of playing field, as you know, our competitors now have an edge against us.
Yes, 100%. So I think there, if you look specifically at the citrus industry, even within the sector, there's different nuances with the different citrus products. So South Africa is a notable player in terms of oranges for that counter-cyclical citrus exports into the US. Chile also plays a big role, but there's really very limited scope to source alternative volumes out of this Southern Hemisphere in the months of July to October. If you think about something like easy peelers or mandarins, there is some scope from alternative producers, specifically Peru, to channel some of their European volumes possibly into the US market. They would be more competitive.
Do you expect the US to then possibly deal with a supply issue, considering that, you know, different countries export different percentages of their citrus to the States?
Yeah, so I think the problem there is only time will tell, and where the incidence of the different tariffs fall will essentially be shown over the next few weeks. There is definitely a risk that this will be pushed down the value chain, and that producers on our side would have to bear a substantial part of the brunt of the tariffs. And there, I think it's will be crucial to see what happens over the following weeks and how agile we can respond to that by possibly diverting some of our citrus volumes destined for the US market into alternative jurisdictions.
Yeah, and I guess it's really a wait and see game. But there are going to be, you know, those costs that are incurred, and that, of course, might be pushed through to the U.S. consumer, with some estimating that the tariff hike on citrus exports to the U.S. will translate to an additional $4 per carton of local citrus. Do you think the U.S. consumer can handle this? I mean, looking at some soft data out from the U.S., I'm thinking of the consumer confidence print, which came in lower, and that, you know, suggesting that the consumer could be under pressure.
Yeah, most definitely. And I think what adds an additional layer of complexity is that within a perishable food landscape, you also need to consider that a consumer would have options, right? So if a citrus product becomes too expensive, there might be scope to rather consume apples or bananas or whatever would be more readily available given the relative tariff structures out of various countries and jurisdictions. So I think there's no clear answer at this point. At
Yeah.
what we are thinking about is the loss in market share that we could potentially see if we lose the volumes channeled into the US.
With so much uncertainty still at play, Marlene, what have you made of, I guess, South Africa's response to these tariffs that have been implemented? You know, we have industry experts calling on South Africa to try and initiate another trade deal, considering that, you know, we still don't know where we're at with AGOA, and these tariffs, some say, are nullifying the benefits that we have received from that trade pact. What have you made of SA's response or lack thereof?
I think there is an acute awareness that all players or stakeholders should play their part, and this goes for public and private sector. I think the challenge that we have in terms of diplomatic trade relations with the US is that there's 60 odd countries trying to White House with similar wants and needs. So our sense is that all the stakeholders would need to mobilize long-term relationships that they have with their US counterparts. We've seen with the Mexican tariff round in March that there was some concessions made in terms of auto parts coming out of Mexico that needs to go into US manufacturing. And so maybe if there's a case to be made in terms of food affordability and food availability, that some of these tariffs could be reduced or
Yeah.
exempted. Yeah, just to level the playing field for everyone concerned.
Marlene, thanks so much for your time and just sharing those insights. That was Marlene Louw, Senior Economist of Absa AgriBusiness.